Hello and welcome to Long Investor. So today let's take a look at the Hycroft mining, ticker symbol HYMC. It got very popular these 2 weeks because of AMC buying in, and I'm going to share my personal view on the company. So we'll be looking at three things. First, where the gold price is heading. Second, the company itself. And finally, we're going to look at the technical picture. So the gold price is mainly driven by the macro environment. So as for the macro environment, so in these two videos, I provide data and my reasoning of where I think the market is going by the end of the year. So for example, in this video, which I made on February 14, I've mentioned gold is a good buy at that moment because it's a good hedge against inflation, recession, and a possible Russia conflict. And we can see after February 14, gold has a really nice rally up. And on this video, just 3 days before the Russia conflict, I suggest that if the conflict happens, the S&P will most likely to have a quick breakdown and then it will quickly recover, which sort of happened right now. So as of this moment, I still stand firm of what I believe the market will be heading by the end of this year, unless the Russia conflict continues for longer than I expected, which I will talk about it later in the video. So I do highly recommend checking out these two videos afterward. And as for the gold itself, previously I have mentioned a potential gold stock, and at the beginning of the video I have covered where I think gold is heading and the macro that support it. So you can also check this video out afterward. So in simple word, I believe that there will be another bull run on the stock market, which gold will most likely to consolidate a little bit more before it has a breakout. The conflict between Russia and Ukraine was a strong catalyst for gold to have a run out, but as soon as the conflict ends, which nobody knows, I can see gold will drop a little bit back down. So there is pretty much two scenarios. So one is the Russia-Ukraine conflict continues until recession comes. So the gold price will most likely to consolidate in this level. And the other scenario is that the conflict will resolve within these 2 months, and then the stock market will have the final rally, which will bring gold back down to have a consolidation at a lower range. This is gold in weekly chart, so you have a cup and handle pattern that took 11 years to form. So the ultimate target would be the cup height on top of it. So it will be, so if you take 1900 minus 1100, so you get a $800 of height. So if you add back 800 to 1900, then you'll get 2700. So this will be the target price if the gold breaks out of this pattern. And in order for gold to break out, the stock market has to be in a bear market, which originally I think it will happen in a year or two, but the Russia-Ukraine conflict sort of delayed the final bull market run up and also bringing recession time closer. And as I've explained in my previous video, this is a very long play. As you can see, it took 11 years for the cup to form, and it might take 5 to 6 years until we reach the target price. So we're looking at maybe 1 to 2 years for the stock market to go into a bear market, which will have a breakout for gold, and another few years for gold to continue to go up to reach the target of 2700 price. So in total, we are really looking at a 5 to 6 year play. So our number one point, gold. So gold will most likely to go up in the next 5 or 6 years or so, because we can see the inflation data and then the Fed will rise the rates, which will trigger a market growth slowdown, which will trigger the bear market or recession. So all of that will benefit gold, and when the gold price is going up, its related company will also do well also. So even if, let's say, they miss earning or if they have some kind of incidents during the mining, people might do a short-term sell-off. But if the gold price continues to go up, and then people will say you missed a quarter of earning, maybe you mine less gold at that moment, but then since gold price is going up, your revenue can benefit from the gold price rising. And it's not really too early or too late at this moment, so I think it's okay to get into gold company at this stage. So second, let's look at the company. So a big factor in a gold mining company is the location and the gold mine that they have. So before doing a full-scale digging, they will usually drill holes on different part of the map to see the gold concentration level, and it is usually represented by the gram per ton. So every ton of earth that they dug up, there will be how many grams of gold contained in it on average. And they have not done any drilling between 2013 to 2020. So I'm guessing they did some drilling between 2009 to 2012, and then they have been mining since then, and a mine usually lasts for 10-20 years, so it's about time that they do a new assessment. So this is the drilling result from 2009. So you can see the gold concentration is about 3 grams per ton at the depth of 200 meters. So they usually show the best one on the top. And this one is a drilling result from last year. So these two holes are really low graded, and the one that has some potential is this one. So you get 5.8 grams per ton, but it's also 100 meters deeper than what they have been mining. So although they might be getting a little bit more revenue, at the same time their costs will be higher. So in terms of the company's performance on gold, I won't say there is a breakthrough as of this moment. And then they have a pretty high concentration on silver, but silver costs a lot less than gold. And also if you look at the price history, although they kind of move in similar movement, but gold is very close to its all-time high and silver hasn't even reached up its all-time high yet. And just for in comparison, the Leviathan gold that I mentioned, they have also conducted drilling last year and they recently have the result. And one of the hole has 18.86 gram per ton at 330 meters. So in comparison, they have about 3 times as much gold at similar depth. So company itself, it doesn't really have a breakthrough in finding a better gold mine. They did find gold at a higher concentration, but it's also deeper than what their current mine is. So I'm not an expert in mining, so I don't know how much of a offset they will create. And finally, the technical and risk. So for the past month, it went up 10 times, so it's almost 1,000% already. And if you zoom out a little bit, you can see the recent volume is absolutely massive. And I would say 2 times to people who have been holding, they would have been sold off somewhere in consolidation or in a drop off. And with the massive volume recently, I would say most of the recent holders are within this price range. So there won't be a lot of selling pressure from the previous holder. And they also have the financial result coming up on Thursday. But I'm not here to guess the earnings. I'm just providing 2 scenarios of what I would do for the stock price. So usually when a stock goes up like this, the company will most likely to do share offering to raise cash for for the expenses, which they already did. But obviously they sold some to HYMC, and then there's another share offering 89 million share, and at the end of the day they will have 196 million shares. And the Weibo one has not updated yet, so they only show 60 million shares right now. So share offerings usually lowers the price, but since it already happened, so we have one less of a risk of a sudden drop for further share offerings. So let's zoom in a little bit and take a look at the 30 minutes chart. So after the initial spike up, it found support around the 70 cent zone, and then there's another one up and it found support on the $1.4, and the second time it went up, it has a divergence on the RSI, so which usually means that it won't continue to go higher. And as it falls, you have a rise of selling volumes comparison to the initial falling, which you have a lower selling volume. So even without looking further at this moment, so usually when things like that happen, it will usually consolidate or it will fall back to find support and making this as a double top. And currently it's not falling yet, it's consolidating. And let's talk about resistance first. So if we are to zoom in more on this spike of volume. So this spike of volume all comes to this 1 minute where people are selling and buying. So there's a very strong resistance starting from $2.6. So personally, I don't really feel comfortable getting it at this price yet. Although gold is going to go up, but it's not going to go up in the short term. And the company has been mining in the same mine. The more concentrated area that they found has not been mined yet. And in a technical standpoint, if I were to open a position in here, and if it drops, it will most likely have some kind of technical rebound. So if you're getting it at 1.2, you might consider adding more at 0.6. So your average would be around 0.9. And if you ever bounce back up, and the technical bounce might take you back to around $1 area. As you can see, there's a support and there's 2 candle closing at this price, which will break even. And if the earnings somehow becomes a catalyst and people are going in for it, I would say starting 2.6, you will encounter a very strong resistance. But personally, I don't feel comfortable getting it in here yet. I would be more comfortable if it dropped back down and then get it in for the technical rebound. And if I'm not greedy, I'll have a higher chance of getting like 20-30% of gains. So this is it on my take on the Hycroft mining. If you find this useful and if you want to see more videos like this, please remember to like and subscribe. That will definitely give me more motivation to make more videos like this. So let's see how this goes next week, and I'll see you guys next time.